Hey, welcome everyone. My name is Brian Martinez with NuView Trust Company. I'm really excited about our guest speaker today. His name is Dan Najarain. He is out of Boston, Massachusetts. He's got some great information on crowd lending and private lending. Pretty excited to bring him on. Hey, Dan, how's it going today?
Good. How are you?
I'm doing pretty good. Yeah, tell the audience a little bit about yourself and your background in the crowd lending industry.
Sure. So my background is that of an attorney. Been a practicing attorney up until about 4 or 5 years ago up here in Massachusetts. Got over the bar in 2001, and in 2015, one of my clients came to me with the idea of getting into private lending. So over the course of probably the next 6 or 8 months, him and I noodled on it, figured out how to get it done, and opened our doors and started raising capital and making loans in 2016. Since 2016, we raised about 30 million in capital, mostly through friends and family. And we've done about $250 million of loans up here in the Northeast region with a focus on Massachusetts.
All right, that's amazing. I'm pretty familiar with private lending. What's the difference in, private lending in a fund versus, just doing your own private lending?
Well, anybody can do private lending. The mortgage business is probably the oldest business in the world. People have been lending and borrowing money for as long as time's been going on. The way we're structured and the way that sort of the other option that besides just sort of lending it out of your back pocket, so to speak, and taking a mortgage back, is we went out to all our friends and family and other accredited investors. That is one of the requirements to be in the fund. And we said, hey, let's sort of unionize this thing, and let's put a whole bunch of your money in a fund together, which will give us buying power and it'll allow us to leverage that money up to increase our lending ability and thereby generate more profits and a better return for our investors. So with that model, everybody buys a share of the LLC, that is the lending entity, and we're able to build that thing up to about 30 million. So you get a little bit more, you get some more diversity. You're diversified across a whole bunch of different loans when you're in a fund, as opposed to, your friend comes in and says, hey, Dan, I want to borrow $300,000 to do a project on 123 Main Street. Well, if that project goes upside down, your money's at risk. In a fund structure, now you're spread across 70, 80 loans that we have on our portfolio. So if one goes bad, yeah, it's not great, but at the same time, you're not going to get hurt because you got 79 other performing assets that'll pick up that one non-performing asset. So it offers some additional protections in that sense.
Yeah, 100%. That makes sense. So why is private lending a good investment? What benefits come along with that?
So security, especially when it comes to real estate. Again, real estate's one of those appreciating assets that's appreciated, consistently over the last, 40, 50, 60 years, with certainly a bigger appreciation over the last decade or so. You don't have or haven't had in certain areas, and mainly up in the Northeast and some of the other stronger real estate markets, you don't have the ups and downs that you have in other markets, whether it's the stock market or commodities or whatever the case may be. So you've got some safety and some in the fact that it is a hard asset. It's real estate. It's there. It's a home. So when we make loans, or when anybody with a fund that does real estate backed investing, they're going to take a mortgage back on the property. So the same way that you would take a mortgage back on the home that you own or a condo that you own, we do the same. And we have parameters, and everybody in this business has parameters. So we'll lend up to 70% of the after repair value. So in very simple terms, if you got a property that's worth $100,000, we'll make a loan up to $70,000. And we've got that protection built in. So now you've got 30% of equity. In the markets that on the Northeast that could hit the hardest back in 2007, 2008, you saw a drop of about 25 to 28%. So that's, in the worst case, you're still going to have your principal protected in a fund structure. And again, the other safety in numbers in the private lending world is the fund structure. Again, if you have one loan that goes bad, you still got the protection of the other loan. So you got an LTV protection, plus you got safety in numbers in the fund structure.
Yeah, no, that makes sense. So you did mention, it's limited to accredited investors. Anyone listening that might not know what it takes to be an accredited investor, and maybe that's their goal, or they just need to know if they qualify for that. What are the qualifications to be accredited?
Yeah, it's pretty simple qualifications. simple in terms, hard to achieve is what I would say. So for an individual, you got to make a couple $100,000 a year. For a couple, it's $300,000, or you can have $1 million in assets exclusive of your primary residence. So you'd have to have a couple of separate secondary homes or investment properties or cash in the bank or stock market assets, something like that. So that's what accredited investor is.
Okay, so then your filing then would be a 506C, is that
That's
right?
right. That's
Okay.
right. Got it. You got it.
Okay. Any plans for any future funds where maybe 506Bs or maybe sophisticated investors can invest with you?
So no, the short answer to that is no. We've opened up a retirement fund, which allows us to take self-directed IRAs. So we do have two funds running parallel. They're different in the way that they operate. The retirement fund is a note structure, so you actually lend the money. Your IRA lends the money to the retirement fund, which then in turn lends the money to the borrower at the end of the day. And the fund structure is a membership ownership of an LLC. So it's a little bit different, but the retirement fund allows us to capture self-directed IRAs for people that want to invest in this type of investment vehicle.
Okay, awesome. So with all your years experience in this, private lending sector and your real estate experience as well, is there specific types of professionals that you maybe target or typically are the types that would do the private lending?
Are you talking about on the investor side or the borrower side?
The investor side.
So on the investor side, look at it. To me, it's an accredited investor, and that could be a successful plumber. That could be a successful lawyer. What it really is, there's two types of people. There's people that look at our fund as a way to mitigate some of their more risky investments because we sort of sit in the middle with our returns. We land anywhere between 8 and 10% on our return. And it's a less risky product for the reasons that we discussed earlier. There's some safety in numbers, there's some safety in real estate, and there's some safety in the structure of our loans. But we also see some people on the other side that like that safety. It is a little bit riskier than what they normally would do. They're very, very safe with their investments. And so this is a higher return, but they're still satisfied with the safety, the risk profile. So we see we run the spectrum as far as the risk players on the investor side. But again, from a straight professional, what profession do we see? We see plumbers, we see electricians, we see lawyers, we see doctors, we see real estate investors, we see stock market guys. It really runs the gamut for us. And we've been very lucky in that we haven't had to take on any institutional money to keep the doors open. It allows us to have a lot of freedom in our lending and really control what we're lending and who we're lending to.
Yeah, I love that. How about on the borrower side?
So the borrower side, we see everything from your first time fix and flipper that may have watched the television show and want to dip their toes in. We're a little bit weary of them, and we take the proper precautions. But the real guys and women out there are the ones that do 3 or 4 flips a year. They're borrowing from us. They're putting 20% down on the purchase price, and then we're funding the rest of that acquisition cost plus the rehab cost, and then they're creating value. They're doing a value add play, and then they're either selling it or holding on to it. So the ones that we like to see again are the people that do 3 or 4 a year. They have sort of a system in place or a machine that has 4 deals, and they're all at different stages. One's in the acquisition stage, one's 50% complete, one's about to go on the market, and one's under agreement, right? So they just keep keep those wheels turning, and they constantly making a little bit of money on each one. They're hitting a whole bunch of singles and doubles. They're not going for those home runs. They're not taking out too much debt, and they just keep trucking along. And they're the true professionals, and those are the ones that we like to target.
Okay, awesome. So anyone trying to reach you or interested in maybe putting some money with you, how would they get a hold of you, or who should they reach out to?
Yeah, so there's a couple different ways that you can reach out to us. The website is www.crowdlending.com. And that's a landing page that essentially gives you the option to go to an investor side or a borrower side, depending on what side of the fence you're on, or maybe you're on both. We have people that are on both. They invest with us and they borrow from us. if you want to talk about, I think that's a good place to start. If you would like to get some information about the retirement fund, you can reach out to Mike Najarain in my office. His email is mike.n@crowdlending.com. And if you're interested in the fund side, the regular fund, you can reach out to me at dan@crowdlending.com.